Hey friends, Eric Zanatelli here, your hometown mortgage expert, and we have another question for the day.
Hey there, Brian Zanatelli with the Z team at Sente Mortgage. And a lot of times, as production partner, part of my job entails talking to borrowers about their house payment. And so I'll ask, what would you like your house payment to be, or what are you hoping to expect? And a lot of times our borrowers will say, well, my rent is $700. I'd like my house payment to be around $700. As the production partner, my question to them usually is, does that include your taxes and insurance? Do you want your $700 house payment to include everything or just be the principal and interest? Commonly, this is where a lot of borrowers get a little confused. Can you explain what goes into a mortgage payment?
What a great question, Brian. So I actually have a little illustration here on a housing payment. And this is actually from a borrower I talked to yesterday. He's currently paying $770 a month in rent, and we're looking at purchasing a house that costs $100,000. And so in this example, his house payment would be $942, but how we get to that total is we get to that total in four parts. The first part is paying the money back. At the interest rate I quoted him, it would cost $669.82 in the monthly payment to pay back the money. But his payment and people's payments are also going to include 1/12 of their homeowner's insurance. Hazard insurance is homeowner's insurance, protects your house against wind, fire, hail, rain, stuff like that. There's going to be 1/12 of the property taxes that are paid to the county that's in there. And then there's going to be mortgage insurance in there. And so the total payment that a person would send in every single month for this exact property would be $942.28. So when people ask and they say their rent's a certain number, it's really hard to get to their number a lot of times when we have to include these things. I hope that maybe helps make some sense.
It does make sense, but it brings up another question. I heard insurance, and I actually had a realtor the other day reach out and say, how can my borrower avoid mortgage insurance? So can you explain the mortgage insurance on this loan?
Really great question. And so this particular loan is an FHA loan, Brian, and FHA loans and USDA loans both are built similarly in that the person that I quoted for him $100,000 purchase price, FHA requires a 3.5% down payment. So therefore, his base loan amount would be $96,500. However, FHA has an upfront mortgage insurance premium. That's what MIP stands for, of 1 3/4% of the loan amount, or $1,688.75, of which they're going to finance that $1,688. In other words, instead of his loan amount being $96,500, his loan amount's $98,188. Then on a monthly basis, they're going to collect 0.85% of the loan amount for the life of the loan. On FHA loans, the mortgage insurance is for life of the loan. 0.85% of $98,188 equals $68.05 a month. Some people say, Brian, that they think mortgage insurance is a bad thing. I always think mortgage insurance is a wonderful thing for the simple reason mortgage insurance allows people to purchase houses without having to save up a 20% down payment. So mortgage insurance can be your friend.
Thank you. That answers the question. If you have any more questions, please reach out to us, private message us below, or send us a direct message.